For those who are well positioned, a recession could mean the opportunity of a lifetime. Taking the right steps could put you in a spot of economic success for the rest of your life and create significant wealth for your family. However, for those who are not well positioned, this could mean looming financial devastation. In order to come out to the other side in a much better position, you should know exactly what moves to take. Make sure to watch the entire video because in a few minutes, you will be learning on how to improve your financing and investing for your future. You should be cautious and vigilant when a recession presents itself, but you shouldn't allow it paralyze your long-term planning. If you're serious about creating wealth, you have to be ready for tough times. Focus on what you need to do right now to keep moving forward for your long-term objectives. The reality is that experiencing temporary financial difficulties is an inevitable part of the wealth-building process, so you shouldn't let it discourage you or catch you off guard. One useful piece of advice is to keep track of your progress throughout time, whether that's annually, quarterly, or monthly. This way, even if you feel like you're not making any progress, you can look back at your numbers and see how much improvement you've actually made. One point is for certain. Paying off debt is like investing with a guaranteed return. For example, if you have $500 to invest in the stock market or pay off a credit card debt with a 30% interest rate, choosing to pay off your credit card debt first will result in a guaranteed savings of 30%. This is equivalent to receiving a 30% return on your investment. If you invest money in stock markets, a guaranteed profit, or in this case a guaranteed savings, is something to think about, since you should also put in mind that you might make money but you could also lose money in this. What can you do right away to start building a fund of money that will be available for investments as well as other uses when the chance arises? If a major disaster occurs, having extra money will act as a cushion. This is a wonderful time to clean out your garage and sell stuff that are just gathering dust or host a yard sale. Do you have any abilities that you could utilize to generate a little more money in your spare time, in addition to the typical 3 to 6 month emergency fund? If so, then now is the time to showcase all of that to earn some extra cash. While working overtime is probably the last thing you'll want to do, if you can squeeze in a few extra hours here and there, then it might be worth it. If you've been paying extra money toward low-interest debt, you might want to consider making only the minimum payment for a while and putting that money towards savings instead of your low-interest home mortgage. Building up your cash reserve in this way could be useful in difficult times. When interest rates are high, markets are falling, so it's a bad time to make major financial moves in these situations. Why take on those additional costs if you don't need to? It's not the best time to make money out of savings and put it towards something else. You're never going to regret having an extra well-padded savings account. Part of saving cash is avoiding large purchases or at least putting them off to a later date when the dust has settled in the future. Keep in mind that any money you can put away today has the potential to bring you returns that are exponentially greater in the years to come. So you should think twice about that major house decorating and pool construction right now. Savings first. When the economy is experiencing growth, the phrase "a rising tide lifts all boats" refers to the fact that investments, regardless of their level of quality, tend to perform well in markets. And just about everyone you know is bragging about their golden touch and real estate over the long term. Only those who invest in high-quality assets are going to continue making money, while the others are going to be wondering where things went wrong. Examine your retirement accounts as well as any other investment accounts that you have, and take a close look at exactly what you're investing in. In particular, think about which stocks and funds you intend to contribute more money to, as well as which ones you intend to invest more money in overall. You'd be amazed to find out how many people consistently put money on retirement saving vehicles, despite the fact that they have no idea what the money is being used for during economic downturns. Long-term investors who are ready to take advantage of these major discounts are in for a treat at this time. While it is unreasonable to expect to successfully time the market by investing available cash when stocks and funds are trading at their lowest prices, great company stocks will often be trading at a discount because the market will price them negatively. Due to fear, investors are scared of what the future will hold and they sometimes pull money from the market, consequently reducing prices. investors are scared of what the future will hold. Although stock prices are falling, you should probably avoid purchasing specific stocks in order to lessen the likelihood of incurring financial losses. As opposed to individual stocks and cryptocurrencies, concentrate on purchasing high-quality index funds and ETFs, as these have a strong likelihood of recovery and are moderately risky. There are various types of a fund like this. For instance, you can choose a growth fund, an even fund like the S&P 500, which can be purchased at a big discount. Don't feel the need to go out and investigate high-risk possibilities with retirement funds, because S&P 500 value fund nearly any other variant that has such a significant potential reward. Being prepared to take advantage of these incredible opportunities will significantly increase your profits. But don't use that money anytime soon. Be ready to wait 3 to 5 years for the market to recover before accessing that capital. Otherwise, you don't need to decide when to deploy that money because the rich know how important it is to have an abundance of cash on hand, so they have the means to take advantage of these amazing deals in the market. Increasing your monthly financial contributions would be easy. You can still benefit from those reduced rates by using the mindless, hands-off strategy of dollar cost averaging, which can prevent you from feeling overburdened. If you've been waiting to start investing in real estate, economic uncertainty may be an opportunity. People who were previously financially secure may now find that they need to sell. Uncertainty can frighten other investors away from investing in real estate, making it easier for those who want to start. Demand for rental homes may also rise for a variety of reasons. When the economy enters a recession, not all businesses will suffer. In fact, many businesses will see a decrease in sales, especially those in non-essential industries. But there are some businesses that will thrive and do better than before. Despite the fact that real estate prices don't usually see a significant drop during a recession, there's always a higher chance of finding a distressed, motivated seller. The proprietors of these companies will gain enormous wealth, as was the case during the pandemic, when some companies closed and lost money while others experienced amazing growth. What kind of side hustle might you create that people would buy regardless of the state of the economy? Or even better, one that would succeed in a bad one. Regardless of whether or not the economy is expanding, individuals still require a wide range of enterprises, including various automobile and home services. Using your expertise, enthusiasm, and talents, choose something that could help you make money during a recession, such as pet services and products. Making the right moves during these times of uncertainty and distress will reward you many times over in the years to come. A recession means a chance for you and your family to build long-term wealth, but only if you've made preparations. You need to be ready to act when these opportunities present themselves because they don't come around often and they don't last long. I hope you liked this video. Be sure to subscribe and give it a thumbs up. Thanks for watching.